Hey guys, Nick Johnson here. We've gotten lots of questions from our retirees at Shell about the Shell pension transfer to Prudential. So let's jump into it. Shell has informed retirees, and this has been major news, that they're closing on a $4.9 billion pension risk transfer to Prudential. That's a risk transfer. So what they're actually doing is they're taking assets and liabilities off Shell's balance sheet, and now Prudential has the obligation to pay your Shell retiree pension. If Prudential is going to be taking over your pension, you've probably received a letter that looks a lot like this, informing you of a lot of the details and a lot of the changes, and letting you know, as of May 2024, your checks are going to be coming from Prudential and not Fidelity. So who's really affected? Retirees who've already started their annuity payments prior to August 31st, 2023. If you haven't started your pension, or if you started your annuity form pension after this date, you are not affected. Shell still has an obligation to pay your pension. There's still assets and liabilities within the trust on Shell's balance sheet to ensure the pension gets paid. So this is for primarily people that have been retired a while and are already receiving pension payments. How's the structure changing? Well, if you think about it right now, Fidelity is the one administering the pension. You get your pension checks from Fidelity. You log online to netbenefits.com. You can see the payment history. You can adjust the withholding. The medical benefits are being withheld. Fidelity is administering the pension, but they're just the custodian. They're the administrator. Shell is the umbrella sitting over it, right? Shell is the trustee over the trust. Shell has the obligation of the liabilities and the assets to ensure the pension gets paid. So Shell is involved with the pension payment today, and Shell could change who's administering the pension, but right now, Shell's got the obligation. Once things flip in May, Prudential will now have the obligation, right? But Prudential steps into Shell's shoes. So Prudential will have the assets and the liabilities. So it's their obligation to both administer the pension and to ensure it gets paid. Prudential has the obligation to pay the pension, and you will be a creditor of Prudential. They have the obligation to pay a pension to you. So the question I get is, oh my gosh, who is Prudential? Is my pension at risk? Are they still going to be around? And I think it's a very good question, and I understand why people are concerned. First off, let me state, I think your pension is going to be very safe with this transaction to Prudential. But let me break down what we should be thinking about and how we take considerations. Generally, if Shell was a lower risk company, it'd be better for Shell to have the pension. If Prudential was a lower risk company, they're more likely to pay their debts. It'd be better for Prudential to have the pension. Now, in our industry, in the financial industry, we have major rating agencies like Standard & Poor's and Moody's rate companies. So one of the things that we look at in this analysis is, what are the ratings? If we look at the long term for the Standard & Poor's, it is A+. If we look at Standard & Poor's for the Prudential Insurance Company of America, it's AA-. If we look at long term for Shell, it's AA2. If we look at long-term for Prudential, it's AA3. They're very close. So overall, we're not seeing any substantial credit risk increase having the pension paid out by Prudential versus Shell. They've got very similar credit ratings. The difference is the PBGC versus the TLHIGA. Wow. What does that all mean? When Shell has oversight of the pension, there's a national agency, the Pension Benefit Guaranty Corporation, which backstops the pension. Shell's not able to make all their pension payments. The PBGC steps in and assists. Now that the pension obligation is going to Prudential, an insurance company, the PBGC does not step in to assist if there's problems. It's the Texas Life and Health Insurance Guarantee Association. So it's a state-based insurance association, if you're here in Texas, versus a national guarantee corporation. And in all honesty, the PBGC has a more robust balance sheet and has more security than the Texas Insurance Association. So overall, this is a downside of the Shell pension moving from Shell's umbrella to Prudential. But in all honesty, I think this is really an edge case. By the time one of these guarantees is going to step in, that means they're already defaulting on the pension. That means they're already mismanaging the assets. That means there's already major issues. And given the credit ratings today and given the quality of these companies, I think it's extremely unlikely that happens to either company. So I wouldn't be overly concerned that, hey, we're moving from a federal guarantee to a state guarantee at this juncture. Next question is, when's the transfer going to happen? So beginning May 1, your first pension payment is going to be coming from Prudential and not Fidelity. So that's why in the 2024 year, you're going to end up getting two 1099s. You're going to get a 1099 for the first 4 months of the year from Fidelity and the last 10 months of the year in Prudential. And of course, the 1099s for the 2024 year, you'll end up receiving in 2025. A little bit of administration headache, 2 tax forms, but overall, not a massive deal. One of the things that is changing is how the healthcare premiums get paid. Right now, Fidelity is administering the pension, and they're administrating the retiree healthcare. So many retirees are on the retiree healthcare, and they have their premium payments being taken out of the pension. So there's the growth pension amount, right? Then it's net of taxes and healthcare premiums, and you walk away with a net. Since Prudential is getting the pension and Fidelity is keeping the retiree healthcare administration, the premium payments for the health care and the welfare benefits are not going to be coming out of Prudential. You're going to have to go online to Net Benefits, to Fidelity, and select how you want them to be paid going forward. So Prudential is paying the pension. Fidelity will be handling the health plan administration. At the end of the day, I wouldn't overly concerned about this. I think it's going to be a little bit annoying. There's going to be some administration. You're going to have 2 logins, one for Prudential and one for Fidelity. But overall, I would say your pension still looks safe. Shell is transferring the pension to try to reduce the risk on its balance sheet. Generally, companies that don't have large pension liabilities tend to have better stock price valuation. And today, interest rates are higher. So from Shell's perspective, they think this is a good time to move the pension over to someone else to handle. But as pensioners, I wouldn't be concerned that you're not going to get your pension payments now or in the future. Yes, I prefer to have the PBGC as the backstop. That's legitimate. Additionally, historically, and it's been quite some time now, Shell used to do inflation adjustments on the pension. That's clearly going away. It's been over 10 years since Shell has done a discretionary inflation adjustment on a pension. Now that Prudential is taking over the retiree pension, there's zero chance in my mind that we're going to see an inflation adjustment. So the pension is what the pension is, and it's going to be a Prudential going forward. Yes, this is a shift. Yes, it's a change. Yes, you'll have 2 logins, but overall, I still think you're going to be in great shape. If you like this content, you found it valuable, do make sure you subscribe. We're regularly putting out information that a Shell retiree would need to know. You can also follow us on LinkedIn, Facebook, and social media.